good morning and happy Wednesday. Welcome to today's episode of Morning Wealth. Three things that we will talk about. Better data from US and China. Tech stocks remain the most crowded trade. Fed and what to expect. Wall Street closed mostly in the green on Tuesday, extending Monday's sharp gains as the rebound in tech stocks gained steam. On the corporate side, Apple shares climbed early in the session in anticipation of its showcase event and after the company unveiled a new service that connects Apple Watch users to trainers, but later gave up most of those gains. The Dow gained 2 points to close flattish. The S&P was up 0.5%, while the Nasdaq was higher by 1.2%. Treasuries barely moved, keeping the 10-year yields around 0.68. The dollar was split against the G10 peers. The pound and yen strengthened the most, while the other currencies weakened. Oil jumped 3%, while gold inched lower. Asian equity futures are pointing to a mixed open. In other markets, the Shanghai Composite closed 0.5% yesterday. Hong Kong was up 0.4%, and the Pan-Continental Stocks 600, Euro Stock 600 rose about 0.7% from an anticipated boost in Chinese demand for European goods. On the macro side, data on Tuesday showed US industrial production rose in August, but at a lower rate than earlier in the summer, indicating the recovery in manufacturing is slowing. But the New York Empire State Manufacturing Index jumped to 17 in September of 2020 from 3.7 in August, well above the forecast of 6, and point to a solid expansion in business activity in the New York state. Earlier Tuesday, key economic statistics showed that China's economic recovery accelerated in August. Retail sales in the Asian nation returned to pre-COVID levels with their first month of growth this year. Other major indicators, including factory production, investment and property activity, all gathered pace, signaling a strong rebound for the world's second largest economy. On the equity side, tech stocks are the world's most crowded trade, say fund managers overseeing 601 billion, fueling fears of a bubble. Investors surveyed by Bank of America have never been so unanimous, with 80% of participants citing long US tech, up from 59% in August. Among the biggest tail risk, concerns about a tech bubble ranked behind only a resurgence in COVID. The survey was conducted in the week to September 10th. On the earnings side, FedEx jumped in late trading after EPS beat the highest estimate. The company is riding a wave of e-commerce demand that's boosting its pricing power by the most in years. It didn't make a full year forecast though. Adobe, on the other hand, had a more muted gain after quarterly revenue and profit beat, but its forecast just matched expectations. On the fixed income side, the issuances pace doesn't seem to slow down at all. The US junk market is rapidly approaching a record year. September volume is now at 23 billion, pushing year-to-date issuances to about 312 billion, close to the peak that we saw in 2012, which was about 329 billion. About 3 billion was on tap on Tuesday, with companies in the energy and hotel space both pricing. In the high-grade issuances, which is your investment grade, this month's tally is over 85 billion. Verizon hosted investor calls ahead of a green bond offering. Lastly, on the FX side, when the Federal Reserve meets today, no changes in monetary policy are expected. The main focus will be their economic projections and dot plot forecast. The summary of economic projections, which will extend forecasts into 2023, will likely include an upgrade of GDP growth and a downgrade to the unemployment rate in 2020. The lack of action on the fiscal aid front may lead to less optimistic projections for the near term, which is in 2021. The Fed funds rate central tendency forecast is likely to continue to indicate rates remaining at zero lower bound through 2023, although the range may show a lift-off starting in 2022. Since the last policy meeting in late July, consumer spending has softened, confidence has declined, and job growth has slowed. However, there are improvements in the housing markets. According to ISM surveys, manufacturing activity is accelerated at a much faster pace, while services has stabilized. In fact, when Powell announced their new inflation strategy, the dollar soared instead of weakening for this very reason. Powell's comments at that time also contained a tinge of optimism as he described the economy as healthy apart from the virus hit areas. So we wouldn't be surprised if the dollar gained on FOMC, but it won't be a smooth ride. What will happen remains to be seen, but it will be a pretty late night because the FOMC releases at 2 a.m. Singapore time, Thursday. So probably Netflix till then and then the FOMC. That's the update. Stay safe and healthy everyone and speak soon.